You're watching Silver News Daily. Subscribe for more.
Did you know that silver investments might face significant challenges in the near future? With the global financial landscape becoming increasingly unstable, marked by market volatility, economic downturns, and rising inflation, silver's outlook is more uncertain than ever. And it doesn't stop there. Geopolitical conflicts and sanctions are further complicating the scene, disrupting supply chains and industrial demand. In today's video, we uncover why experts believe caution is crucial for silver investors right now. Stay tuned, because what we reveal next might just change your investment strategy.
The Netherlands, Hungary, Belgium, Romania, Poland, India, as I mentioned, Turkey, France, Serbia, Venezuela, and Czechoslovakia all do the same thing. Now, all of these countries are massively accumulating gold and repatriating it. They are the most well-funded and, more importantly, the most well-informed traders on the planet. And there's a reason that we will get into where you will see this is just the beginning. There is a reason they are all repatriating their gold. And I want, most people would think it's the counterparty risk. Sure, that has a lot to do with it. The fact that the United States has weaponized the dollar in the treasury market certainly incentivizes this. And that is part of it. A country who can say, where our Treasury Secretary says to CNN, listen, we're okay with Xi Jinping and Putin being friends. They are allies in BRICS. And my first thought is, well, geez, that's really benevolent of you, Madam Secretary. But if Xi gives one penny to the Russian war machine, we will sanction their banks, their companies, and Beijing itself. Never mind the fact that we've given $260 billion to the Ukraine, Stinger missiles and F-16 jets, and intelligence on where to fire them, because we don't count. We are the world reserve currency. And my thought to that is something that is for now and growing long in the tooth. But when you see all of these countries massively buying gold and repatriating it, and then you see at the same time, it's interesting too, these central banks, Jesse, are also going deep into debt. And so they're accumulating debt and accumulating gold and repatriating the gold at the same time. And then you get the head of the Dutch National Bank talk about, our balance sheet has turned negative, but we don't care. We have 20 billion in notional gold held in our gold revaluation account. Yes, you heard that right. And all central bank balance sheets, gold is held in what's called the gold revaluation account. It is my very, very, very distinct belief that you will see central banks revalue gold to a much higher level. Now, as crazy as that sounds over my shoulder, that's what Roosevelt did. He confiscated gold and devalued the dollar by 40%, thereby revaluing gold by 40%. And if you look at what's happening in China right now, there is an arbitrage play going on where gold is 40, 50 bucks higher, maybe a little less, but silver is over $4 higher than the Western COMEX and LBMA price, or LBMA price, which is incentivizing arbitrage. But what happens if they said, look, he who has the gold and the commodities makes the rules. Let's just say we'll peg gold at $10,000 an ounce. It's important to understand that currently that gold revaluation account is on the liability side of the balance sheet. The gold that they own is on the asset side. In other words, the rules are for central banks, you're not allowed to offset liabilities with your gold asset. So they put the mirror.
As we delve deeper into the challenges facing silver investments, let's start by looking at the current global financial landscape. Market volatility is at an all-time high, with stock markets swinging unpredictably and economic downturns becoming more frequent. Just take a look at recent economic reports. Major economies are struggling with sluggish growth, and some are even teetering on the brink of recession. But how does this impact silver? Traditionally seen as a safe haven during times of economic uncertainty, silver's appeal is being tested as investors grow wary of its fluctuating value. Unlike gold, silver's industrial uses make it more susceptible to economic downturns, which can reduce demand from sectors like electronics and solar energy. So what does this mean for your investments? Should you reconsider your strategy? How can you navigate these turbulent times? As we continue, we'll explore the broader implications of these economic challenges and why it's crucial to stay informed. And don't forget to subscribe to our channel for more insights into the world of precious metals and investments. Let's move on to the next factor affecting silver: inflation.
I believe gold has been remonetized, as has oil, that it is becoming far more valuable than the currency that purchases it. It is becoming, I believe, the cornerstone of a new system, and we will hopefully get into that when we talk about the BRICS. But the amount of purchasing by the central banks is off the charts. These are the most well-funded and well-informed traders on the planet, but it's deeper than that. It's also the repatriation of the gold, and that will also play deeply into what I want to talk to you about as we talk about the BRICS. But just in the last couple of years, or the last couple of months, or the last couple of weeks, depending upon which countries we're talking about, some very interesting developments have happened. And I mean, we can start with the Bank of India, who purchased 1.5 times the amount of gold they did in all of 2023, just within the first 4 months of 2024. They brought it home. They repatriated it. They also simultaneously repatriated over 100 metric tons of gold they've held at the Bank of England since 1991. Now, the Bank of England would give direct access to the London Bullion Metals Exchange. The gold that all of the countries have been holding in the New York Fed gives direct access to the COMEX. In the last few weeks, we've seen not only India repatriate that 100 metric tons that they've held in the Bank of England since 91, but in the last few weeks, we saw Saudi Arabia, Nigeria, Egypt, Senegal, Ghana, Cameroon, Nigeria, all of these countries, and South Africa have repatriated their gold from the Bank of England and the New York Fed. This goes along with a massive gold buying spree by these countries. And before them, you had Germany, Austria, Slovakia, Argentina.
Next up, let's talk about inflation. It's a word that's been on everyone's lips lately, and for good reason. Inflation is surging across the globe, hitting levels we haven't seen in decades. Central banks are struggling to keep it under control, and as prices for goods and services rise, so do the costs associated with investing in and storing silver. But how exactly does inflation impact silver? Well, in times of high inflation, the purchasing power of money decreases, making it more expensive to buy and hold assets like silver. While silver is often viewed as a hedge against inflation, the current economic climate is making investors question this traditional wisdom. The costs of mining, production, and storage all increase with inflation, which can squeeze profit margins and make silver a less attractive investment. Moreover, when inflation rises, central banks tend to increase interest rates to control it. Higher interest rates make interest-bearing assets like bonds more appealing compared to non-yielding assets like silver. This shift can lead to decreased demand for silver, further impacting its price. So, is silver still a good hedge against inflation, or are there better options out there? How can you protect your investments in this inflationary environment? Drop your thoughts in the comments below, and don't forget to subscribe for more detailed analysis on the impacts of inflation on various investment assets. Next, we'll delve into how geopolitical conflicts and sanctions are adding another layer of complexity to silver's outlook.
Image in what's called the revaluation account on the liability side of the balance sheet. Hence, they balance each other out, balance sheet. It would be very easy, and this is what the Dutch central banker is saying, to make their balance sheet go from putrid to pristine like that if they just revalue gold. What is gold worth? It's worth whatever the highest bidder will pay for it. And if China and India and Russia and all of these countries say gold's 10,000 an ounce, who does that benefit the most? Oh yeah, that's the countries that have been buying the hell out of it. And when you talk about China, if you believe they only have 2,600 metric tons, I have some oceanfront real estate to sell you in Arkansas, because They've been producing 400 to 500 tons a year for the last 25 years. They're the largest producers and importers in the world. For years, they never told anyone how much gold they have. Heck, we don't even tell everyone how much gold we have. Well, we do. It's supposedly 8,300 metric tons, which hasn't been audited in over 60 years. And when Ron Paul says, let's audit, no, turn down. So the point of it is all of these countries who are wickedly buying gold are not being honest about how much they are buying. You have commercial banks in China that work on behalf of the PBOC that buy gold from the refineries in South Africa and in Switzerland. They don't tell the IMF how much gold that they just bought on proxy for the PBOC. You got gold that they buy that's under 995 pure. That doesn't get reported to the IMF. Heck, the IMF came out recently, just a month or two ago, and said that the amount of gold China says they have is fugazi. It's way, way understated. And so my point to you is, why would they want to tell us how much gold they have if indeed they will revalue it? Here's how much gold we really have. And in other words, it would crowd them out of their continual accumulation of gold using the suppression of the Western central bank prices, where on the LBMA, they admit to trading 20 million ounces of gold and 290 million ounces of silver per day. However, they also admit that the numbers that they publish are 10 times understated, because they only show the settlement. If I sell you 100 contracts and I buy 200, the net is 100 for me, but they don't show that I traded 300. So if that really is the case, they're trading 200 million ounces of gold per day and 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply, distorting the hell out of the price in gold and silver. And my point to you is simply this. This is just beginning. And these countries have understood the Achilles heel to the system is standing for delivery. No one ever did before. And the countries in the global south and east were never sophisticated, coordinated, or wealthy enough to do it. Now they are. And they're draining the exchanges, both the LBMA, the COMEX, the ETFs, and even the Shanghai Metals Exchange. They're all being drained. And I would tell you, this is just the very beginning, I think, of where gold ultimately goes. So for those who think they're too late or want...
Now, let's turn our attention to another critical factor affecting silver investments: geopolitical conflicts and sanctions. The global political landscape is becoming increasingly volatile, with tensions rising between major powers and regional conflicts flaring up in various parts of the world. These geopolitical issues don't just make headlines. They have profound impacts on markets and investments. Take, for example, the ongoing trade disputes and sanctions involving key players like the United States, China, and Russia. These actions can severely disrupt global supply chains, particularly those related to mining and the industrial use of silver. Sanctions can limit the export of crucial materials and technologies, making it harder and more expensive to produce and distribute silver. Moreover, geopolitical instability often leads to increased market volatility. Investors tend to flee to safe haven assets during times of uncertainty. But as we mentioned earlier, silver's dual role as both an industrial and precious metal complicates its position. While it may see some short-term gains as a safe haven, its industrial demand can suffer significantly during prolonged conflicts, leading to a drop in price. For instance, consider how sanctions on Russia had affected not just the energy sector, but also the metals market. Disruptions in supply chains can lead to shortages and increased costs, making silver less attractive to industrial users. So what does this mean for you as an investor? Should you adjust your portfolio in response to these geopolitical risks? Are there strategies to mitigate the impact of these global conflicts on your investments? Share your thoughts and experiences in the comments below, and make sure to hit the subscribe button for more updates on how global events shape market dynamics. Next, we'll explore how supply chain disruptions specifically affect silver's industrial demand and overall market stability.
Hold any EU bonds, and the same thing is true about taking the $5 billion held in the United States. Why the hell would anyone want to hold treasuries from a country that is hypocritical, that is broke, insolvent, and is going around the world imposing these sanctions, and in fact, outright theft. It's theft. It's default, and using the proceeds, even worse than all of that, to buy munitions that we make here, the military-industrial complex, and giving them to the country that they're fighting in a war. I mean, it's as grotesque and egregious as can be. It's as stupid can be. It's almost too stupid to be stupid. But the point of it is that, yeah, that's real. Now, when we talk about the meeting in Novigrad, this is something that, Jesse, it blows my mind at the lack of journalistic integrity in the West. They don't talk about any of this stuff, and you cannot get the hell out of the way of what you don't see coming. And that's everyone that you care about, whom you probably have a similar fate that I do. You try to help people who are maybe even very well read traditionally, just reading the wrong stuff and have no idea what you're talking about when you say these things and look at you cross-eyed. Well, the same thing is true here about this massive development, right? Massive development. So please indulge me. I'll try to do this as brief as possible, but as usual, I'm not very brief because I like to set the stage so that people can understand. All right. There was a meeting. Now, at the beginning of the year, we were told by the BRICS that there would be 200 meetings leading up to the big meeting in October, right? And every one of those meetings, BRICS specific, with things that are, this is a big process. And for people who think that this is just a shotgun deal with the BRICS, it's been going on for 17, 18 years. And now it is accelerating. It's like a roll of toilet paper. When it's new and fresh, you don't see it spinning. When it gets close to the cardboard, it starts to spin much faster. And you see that cardboard. That's a metaphor for a lot of things in life, including life itself, but also in terms of the BRICS union that is growing. Now, let's go back a few weeks before the meeting. And in June, a lot was made of Saudi Arabia not signing the exclusivity deal, not re-upping it, right? And saying, well, we're not saying we're not going to take dollars, but we're also going to take other currencies as well. Well, that was big news. And all of the things that I've talked about with you on your show before all of this happened, that all the OPEC countries on the Belt Road, Saudi Arabia joining the BRICS, Saudi Arabia joining the Shanghai Cooperation Organization. You mentioned, by the way, the president of Belarus. He also called another thing I've been saying for 3 years. He has called for a summit to...
Let's dive into the next crucial issue, supply chain disruptions. The silver market, like many others, is heavily reliant on stable and efficient supply chains. However, recent years have shown us just how fragile these networks can be. The COVID-19 pandemic, for instance, brought global supply chains to a standstill, and the effects are still being felt today. But it's not just pandemics that cause disruptions. Geopolitical tensions, natural disasters, and economic sanctions can all wreak havoc on supply chains. When key silver-producing regions face mining shutdowns, transportation halts, or export restrictions, the supply of silver to the global market is interrupted. This can lead to significant price fluctuations and make silver a less reliable investment. For example, consider the impact of recent sanctions on countries like Russia and economic challenges in South American mining hubs. These disruptions can cause delays and shortages, driving up the costs of silver and impacting industries that rely on it, such as electronics and renewable energy sectors. These sectors may then seek alternatives, reducing demand for silver and putting downward pressure on prices. So, how can investors navigate these turbulent waters? One strategy is to diversify your investment portfolio to include other assets that aren't as heavily impacted by supply chain issues. Another approach is to stay informed about global events that could signal upcoming disruptions, allowing you to adjust your investments accordingly. What do you think? Have you experienced the effects of supply chain disruptions on your investments? Share your thoughts in the comments below, and don't forget to subscribe for more insights into how global supply chains impact market stability. Next, we'll examine how regulatory changes add another layer of complexity to silver investments.
Introduce the SCO, the Shanghai Cooperation Organization, and I highlight the word cooperation instead of coercion, and the Eurasian Economic Union, who, what's his name? Sergei Glaziev is the the economic finance minister for the Eurasian Economic Union, and he is the one who has a big role in what I'm about to talk about. He has called for a meeting of these two unions to join the BRICS. It's going to happen. But all of these things that Saudi Arabia has done as a result of our signing executive order to go green, turning our backs on Saudi Arabia in many respects, and then what's happened as a result of the weaponization of the treasury market, the dollar market. So in any case, there's this meeting in Novigrad, and it coincided with the G7 meeting. And the Royal Crown Prince of Saudi Arabia turned down an invitation to the G7 meeting. So I'm too busy, you guys, but thanks for the invite. And then sends his finance ministers to the BRICS meeting in Novigrad, where 20,000 people attended in over 130 or 40 countries. And what came out of this meeting were a couple of very big developments. First development was that 59 countries said we're joining BRICS, on top of the 10 that are already there. Now, we'll know in October which ones of those 59 have been admitted and have formally applied, but 59 countries have come out and said we're going to join BRICS, and a whole bunch more are contemplating. But a bigger development came out, and that was two meetings between Sergei Glaziev. Now, Sergei is, this finance minister who's been saying for 3 years, this is why I've been saying that the BRICS currency will be pegged to a basket of commodities and a basket of currencies. He's the architect of all this. The meeting was between Glaziev, Putin, and Dilma Rousseff. Dilma Rousseff, for your listeners who don't know, was the former president of Brazil and is now the president of the BRICS New Development Bank. This is no small job. She is the head of the BRICS New Development Bank. And she came out and confirmed that in the two meetings, they have agreed in principle to a new BRICS settlement currency called the unit. We're going to get into that in a moment. And that it would all be traded over Project Embridge. Now, I don't know if I've spoken with you about Embridge, but I have talked a lot about it over the last year and a half or so. It came out in 2023. It's actually been developed for years before that, but developed between China, Hong Kong, Thailand, and the United Arab Emirates. It is a cross-border payment system that allows these countries to trade their central bank digital currencies with one another, not going through any United States intermediary banks or the SWIFT system. And I believe that gold and oil have been remonetized, right? I've said that incessantly, including, look at oil. I always talk about gold, but look at oil in terms of its value.
Another layer of complexity that silver investors must navigate is the realm of regulatory changes. Governments around the world continuously update and implement new regulations that can have far-reaching impacts on various markets, including silver. These regulations can affect everything from mining practices and environmental standards to trade policies and financial regulations. For instance, stricter environmental regulations can lead to increased costs for mining companies. If governments enforce more rigorous standards on emissions and waste disposal, the cost of compliance can be significant. These additional costs often trickle down to the market, making silver more expensive to produce and potentially leading to higher prices for consumers. Trade policies are another critical area. Tariffs, export bans, and trade agreements can all influence the flow of silver across borders. For example, if major silver-producing countries face export restrictions, this can create shortages in the global market, driving up prices. Conversely, favorable trade agreements can increase supply and stabilize prices. Financial regulations also play a role. Changes in tax policies, investment rules, and market oversight can impact how silver is traded and stored. For instance, higher taxes on precious metals can deter investment, while more lenient policies might encourage it. So, how can investors stay ahead of these regulatory changes? It's essential to keep a close eye on government announcements and policy shifts that could affect the silver market. Diversifying your investments and seeking professional advice can also help mitigate risks associated with sudden regulatory change.
China was awarded a massive $2 or $3 billion contract to to modernize Iran's biggest airport. And they're being paid for it in oil. Not dollars like it used to be, but in oil. So I find it ironic that the first two trades that they did in testing this system were between China and the UAE using digital yuan to buy oil and to buy gold. And they worked. And now it is working. And what's interesting about the Project Embridge is that Saudi Arabia just became a full participant in Project Embridge, which is not compatible with US dollars. Not compatible with US dollars. The largest oil producer in the world, who just joined BRICS, became a full participant in Embridge. Dilma Rousseff said that the new unit currency will be 40% gold, not a basket of commodities, but 40% gold and 60% a basket of local currencies. Now, as far as the basket of gold, what did the BIS reclassify gold as? BIS being the most powerful bank on the planet. Well, they reclassify gold, ironically, as the only other tier one reserve asset. And it's interesting, if we go back to 2017, you had all of these banks that I mentioned repatriating their gold. The Bundesbank, Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, on and on and on. Weird at the time. Those same banks in 18 bought more gold as a group than they did in the 60 years previously combined. And then the next year in 2019, that number was doubled. Go on a wicked buying spree and repatriation spree. And then somehow miraculously out of nowhere, the BIS says, oh, by the way, gold is now a tier one asset, the only other one next to US dollars and treasuries. As if they weren't told this. Guess who is behind Project Embridge as well? Oh, yeah. That would be the Bank of International Settlements. They are a full participant and developer with, alongside China, Hong Kong, UAE, and Thailand in Project Embridge, which is not compatible with US dollars, which Saudi Arabia just joined in on. Now, I want to read something to you. I think I probably already did, but just in case. Germany, Austria, Slovakia, Argentina, Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia, to name a few of the banks that have all repatriated their gold from the New York Fed, i.e. the COMEX, and the Bank of England, i.e. the London Bullion Metals Association, along with the central banks buying more gold than any time in the last 100 years, ever in central bank history. And the BIS is involved in it. Now, when I tell you about this unit, it's going to be the aha. My point to you is, I'm going to say to you once again, the BIS has told these banks around the world what to do, that what I'm about to tell you is coming. And so Project Embridge will not allow the U.S. to sanction other countries because they're not even part of it. And it is not compatible with US dollars, right? So all of these countries will be able to develop their own central bank digital currencies, every one of them. And they will trade with one another using their central bank digital currencies. Now, the unit currency, which...
Now, let's talk about another often overlooked aspect of silver investments: storage risks. Unlike digital assets or stocks, physical silver requires secure storage, which can present several challenges and add layers of uncertainty for investors. Firstly, there's the issue of security. Storing silver at home might seem convenient, but it comes with the risk of theft. High-value commodities like silver can attract unwanted attention, and without proper security measures, your investment could be at risk. On the other hand, professional storage facilities offer better security, but come with additional costs that can eat into your investment returns. Secondly, there's the matter of insurance. Ensuring your stored silver is adequately insured is crucial, but insurance policies can vary widely in terms of coverage and cost. Some policies might not cover certain types of damage or loss, leaving gaps in your protection. It's important to thoroughly understand and evaluate your insurance options to ensure your investment is safeguarded. Additionally, storage conditions are vital for maintaining the value of your silver. Improper storage can lead to tarnishing or other forms of degradation, which can diminish the resale value. This means that investors must consider not just where to store their silver, but also how it's stored. Lastly, there's the logistical aspect. Retrieving your silver when you want to sell it can be cumbersome and time-consuming, especially if it's stored in a facility far from your location. This can lead to delays and potential market timing issues, impacting your ability to capitalize on favorable market conditions. Given these challenges, what strategies can investors use to mitigate storage risks? One approach is to diversify between physical and digital silver investments, such as silver ETF, which don't require physical storage. Another strategy is to choose reputable storage facilities that offer comprehensive security and insurance options. What about you? Have you encountered any storage challenges with your silver investments? How did you handle them? Share your experiences in the comments below, and don't forget to subscribe for more practical tips on managing and protecting your investments. Next, we'll explore why some investors might be looking at alternatives to silver in this complex global environment.
It has been developed, and they said we have, in principle, agreed upon using the unit as a BRICS settlement currency. And here's the interesting thing, right? Think about what I was just saying about how the BIS tells these players what to do a few years before. So the unit currency is incredibly interesting. First of all, 40% gold in kilo bars, 60% gold or local currencies, the BRICS plus countries. Now, my belief is the countries who want their currencies as part of the 60%, like China, they will do all they can to back their currencies by gold, and Russia too. And India. These are the countries. India bought 1.5 times the amount of gold they bought in all of last year in the first 4 months, and they brought it home. The countries that will represent the 60% within the BRICS will be wickedly rich in gold. Another reason to not tell the world how much they have. But here's where it gets interesting. The white paper on the unit says that 40% gold holding will, when the countries create these tokens, if you will, for the settlement, it will be 40% gold, 60% basket of BRICS plus currencies. Those currencies in that gold are moved into an escrow account, but all of the gold is held within the borders of the countries who possess it. The gold will not need to be sent to Beijing. The gold will not need to be sent to Moscow. It will be massively independently audited with huge violations for deviation from protocol. In
the face of all these challenges, some investors are starting to look at alternatives to silver. With market volatility, rising inflation, geopolitical conflicts, supply chain disruptions, regulatory changes, and storage risks, all contributing to uncertainty, it's no wonder that diversification is becoming a key strategy for many. One popular alternative is gold. Often seen as a more stable precious metal, gold has a long history as a store of value and is less susceptible to the industrial demand fluctuations that affect silver. Gold also benefits from a perception of safety during economic downturns and geopolitical crises. While it shares some of the same storage challenges as silver, its perceived stability can make it a more attractive option for conservative investors. Cryptocurrencies are another alternative that's gaining traction. Digital assets like Bitcoin and Ethereum have been praised for their potential to hedge against inflation and offer high returns. However, they come with their own set of risks, including regulatory uncertainty and extreme volatility. For investors willing to take on higher risk, the potential rewards can be enticing. Real estate is another solid alternative, providing both income through rentals and potential appreciation over time. In times of high inflation, real estate can serve as a tangible asset that often increases in value. However, it requires significant capital and management effort, making it less accessible for all investors. Then there are stocks and bonds, which continue to be foundational components of many investment portfolios. While stocks can offer high returns, they also come with high risk, particularly in volatile markets. Bonds, on the other hand, are generally more stable but offer lower returns. Diversifying between stocks and bonds can help balance risk and reward. Lastly, commodities beyond precious metals, such as oil, natural gas, and agricultural products, offer another avenue for investment. These assets can provide a hedge against inflation and are often less correlated with traditional financial markets. So, how should you decide which alternatives are right for you? It all comes down to your risk tolerance, investment goals, and market outlook. Diversification across multiple asset classes can help mitigate risks and enhance returns. What alternatives to silver are you considering? Why? Share your insights in the comments below. And don't forget to subscribe for more discussions on diversifying your investment portfolio. Next, we'll bring in expert opinions to provide further insights and predictions about the future of silver investments.
Will be callable, deliverable if people want. So do you think there's any coincidence that these central banks have been buying at a level the world has never seen? Think of what they did with reclassification of gold. They start loading up on gold and repatriating it. Oh, by the way, it's tier one. Now they start loading up again and really repatriating, including bringing all their gold home from the Bank of England and the New York Fed. And the white paper, which Delma Rousseff says we've agreed in principle to, in terms of a new settlement currency, will be 40% gold, and it will be held within the borders of the countries that possess it, audited independently. So this is why they're bringing it home, because they know it will be part of a new system that will massively end any desire to hold U.S. treasuries, which the petrodollar deal said at the excess currency goes into treasuries. Why the hell would they want to do that? Gold has outpaced the 10-year treasury 2-to-1. It's doubled its performance over the last 25 years with no counterparty liability. It's just passed it recently over the last 50 years in terms of its ultimate performance. Just barely. It's doubled it in the last 25 years. And what I'm simply saying to you is that these countries now will have a massive desire and incentive to accumulate gold, which will allow them to create the settlement token held within their own borders instead of the Bank of England and the New York Fed, which are massively rehypothecated and corrupt, which blur the real value of gold. And all of these countries who have been supporting our exorbitant lifestyle, the good graces of our foreign creditors, are now selling treasuries because they can be stolen from you and replacing it with gold, which has doubled the performance of the treasury, has no counterparty risk, and will be the backbone of a new system that is then traded over Embridge, which Saudi Arabia is a full participant in, that is not compatible to U.S. dollars. And it's also important, I think, to understand that, this is a game whereby these settlement tokens, if you will, which again are held in escrow and can be deliverable, will at first only be for the governments and will only be valued upon really the gold within it. But they envision a time where the supply-demand fundamentals for the unit token take over.
Now, let's hear what the experts have to say about the future of silver investments. Financial analysts and industry experts provide valuable insights that can help you make more informed decisions in these uncertain times. First, consider the views of economic strategists who highlight the ongoing volatility in global markets. They point out that while silver has historically been a safe haven during economic downturns, its industrial applications make it more vulnerable to economic slowdowns. When sectors like electronics and renewable energy take a hit, so does the demand for silver. This dual role of silver as both a precious and industrial metal creates a complex investment landscape. Prominent investors also warn about the impact of rising interest rates. As central banks hike rates to combat inflation, the appeal of non-yielding assets like silver diminishes. Higher interest rates make bonds and other interest-bearing investments more attractive, potentially diverting funds away from silver. Geopolitical analysts provide another layer of insight. They emphasize that geopolitical tensions and trade wars can disrupt silver supply chains, affecting both its availability and price. For instance, Sanctions on major silver-producing countries can lead to supply shortages and increased prices. However, these same tensions can drive investors towards precious metals as a hedge against uncertainty. Environmental economists highlight the role of regulatory changes in shaping the future of silver. Stricter environmental regulations on mining activities can increase production costs, leading to higher prices. At the same time, the growing push for renewable energy, which relies heavily on silver, can boost demand. This creates a paradox where silver faces both upward and downward pressures. Finally, market analysts suggest that diversification remains key. They recommend not putting all your eggs in one basket and instead spreading investments across different assets to mitigate risks. While silver can be part of a diversified portfolio, relying solely on it might expose investors to significant volatility and uncertainty. What do you think about these expert opinions? Do they align with your investment strategy? Share your thoughts in the comments below, and don't forget to subscribe for more expert insights and financial advice. As we approach the final
And so the
step,
incentive
we'll
to hold
summarize the key
treasuries
points
is gone.
and provide a
And when you
conclusion on
talk
why
about,
investors should
the
be
incentive to
cautious with
hold gold,
silver in
it's
today's
increasing
global
by the
environment.
day and removing counterparty risk. One last key point about the Embridge and the unit infrastructure is that everyone's talking about, a BRICS common currency. That's not what this is. Every single country, and they make mention of this, every single country will be able to maintain their own monetary autonomy. They'll have their own economies within their own borders instead of being reliant upon a third party like the United States dollar. They will all be able to have their own monetary autonomy and authority, and they're going to keep their house in order and peg their currency to gold, so it will be part of the BRICS settlement currency, the unit. They can trade with one another over Embridge using their central bank digital currencies, but if they need to settle for energy, they have the token, the unit token, deliverable in gold, held within their own borders. All of this is a fuse, if you will, that was just lit under the dollar. And there will come a point what starts out little by little by little by little as these countries accumulate gold, sell treasuries, not too fast to cut off their nose to spite their face, but fast enough because we're getting late in the hour, whereby, it's a very scary, very, very scary prognosis for the Western system and for the dollar and for the treasury market. And these countries, first it was 5, now it's 10, 59 said they want to join. You're talking the majority of human population, military might, GDP, commodities. You talk about this green agenda, by the way, real quick, and then I'll stop and answer any questions you have on this or move on. There was just a report that came out by JP Morgan saying that last year in 23, China and the Eurasian continent were responsible for producing and mining 80% of the rare earths, but China was responsible for refining 100% of the rare earths. What they are doing is building a system on commodities, as Zoltan Pozsar said over and over and over and over again, instead of the debt, the opaque debt instruments of a broken, insolvent, and hypocritical and sanction-happy country. This is real.
As we reach the conclusion of our exploration into the challenges facing silver investments, it's clear that the current global environment is fraught with significant risks. The economic downturns, inflation surges, geopolitical conflicts, supply chain disruptions, regulatory changes, and storage issues we've discussed all contribute to a highly volatile market. Expert opinions highlight the intricate nature of silver's role as both an industrial and precious metal. This dual identity makes it particularly susceptible to economic and geopolitical shifts. While silver has traditionally been seen as a safe haven, the present conditions suggest a more cautious stance is warranted. The ongoing market volatility driven by fluctuating economic indicators and unpredictable geopolitical events directly impacts silver's value. Rising inflation erodes purchasing power and raises costs across the board from mining to storage. Geopolitical tensions disrupt supply chains, leading to shortages and price spikes. Regulatory changes introduce new compliance costs and operational challenges for mining companies. And let's not forget the practical issues of storing physical silver securely and cost-effectively. Given these complexities, investors must navigate this landscape with a strategic approach. Staying informed about global economic trends and geopolitical developments is crucial. This knowledge allows for timely adjustments to investment strategies, ensuring you are not caught off guard by sudden market shifts. Consulting with financial advisors can provide valuable insights and help tailor strategies to individual risk tolerances and financial goals. It's also essential to consider the broader market context and how silver fits into a diversified investment portfolio. While silver can still be a valuable asset, relying solely on it in such an unpredictable environment may expose investors to unnecessary risks. Balancing silver with other assets can provide a more stable and resilient portfolio. In conclusion, while silver investments face heightened risks in the current global environment, a well-informed, diversified, and strategic approach can help mitigate these challenges. Investing wisely means staying vigilant, seeking expert advice, and being prepared to adapt to changing conditions. Thank you for joining us in this comprehensive look at the state of silver investments today. If you found this video insightful, please like, share, and subscribe for more expert analysis and investment tips. Stay informed, stay cautious, and happy investing.
Homestake Mining was the number one performing stock in the entire, when during the market collapse. It was the number one performing stock in the entire stock market when everything collapsed. I agree with Alistair on most everything he ever says. The only thing is that I would not put an overwhelming amount of faith in the mining companies doing that, because things could get very ugly very fast. Maybe a guy like Keith Neumeyer might actually do something like that, as he's one of the only businessmen running a mining company in what is predominantly being run by geologists who don't see things as clearly as a guy like Keith does. I think there's certainly value in mining shares. And if I had to guess where we are heading, look, we have almost $200 trillion in debt. Medicare Part B, 99 trillion underfunded. Part D, the prescriptions, 22 trillion underfunded. Social Security, 77. Government military pensions. We're creating 1 trillion in debt every 100 days. That's 100,000 every second. 1, 2, 3, 4, 5. That's how fast we're accumulating debt. Inflation is going nowhere. Inflation is only going to get worse and worse and worse and worse and worse, especially as countries around the world start divesting more and more and more of dollars and treasuries. I could see the stock market going ballistic. I could. But in terms of, and I can see gold going ballistic. I think it will bring on how do you even say it? It would bring on a mega trend in commodities. And I think the stock market will probably go higher in that environment, maybe a lot higher, but lower in terms of ounces of gold. And so I think that when you talk about it going higher and higher and higher, what's it really worth? You need to have a barometer to measure it against. If measuring it in dollars, sure, it could go way higher, but measuring it in ounces of gold, I believe it will go way lower. And so I think that's the only thing that I would push back against, is that most of these mining companies are hand to mouth. They don't have the financing or the bankroll to disintermediate and go directly to the public like that. Most of them are reliant upon the bullion banks to give them the money, because they spent all their money digging it out and financing it and all the costs associated with mining. So maybe over time, but yeah, history shows that homestake mining, when everything else collapsed, was number one. It would be better than owning other stocks, perhaps. But I do think that I would not say it's out of the realm of possibility that the stock market rip roars, but measuring it in an inflationary, massive inflationary environment, but measuring it in ounces of gold, I think it will end up being less and less and less in terms of its ounces of gold.